market's about to crash. Maybe not. I don't really know. All right, guys, let's have a conversation about the market. This is an investment banking technology channel, and investment banking is part of investment banking technology. So let's talk about investment banking, or specifically the market. So with the new administration taking charge, what do I think this is gonna do for the markets? I've never really before been so conflicted in my perspectives in terms of what the market might or might not do. I really feel like we're on the edge of something. We can easily fall on one side or the other side. And I don't really feel necessarily that we're pulling more to one side versus the other. On one side, we have an administration that is very reckless. They are the opposite of meritorious. They hire people not based on merit, not based on their qualifications. It's all based on loyalty. I mean, you look at even things like who they picked for the Department of Defense Secretary. In this military, and it's not a political thing whatsoever. In our military, we have tons of very qualified generals. And there's 4 different levels of generals. At least in the Air Force, we have, Brigadier General, Major General, Lieutenant General, I think, and General. So there's 4 levels of generals to choose from. General being the absolute highest rank in the military. Someone that would have a lot of experience in managing large teams and budgets and things like that, even on the political side, because generals kind of get into the political side of things. I mean, you could even look at lieutenant colonels just under generals. But instead, I believe Pete Hegseth was a captain or something. Either way, definitely, by no stretch of the imagination, is he the most qualified. So, and again, it's not about politics. They could have picked a conservative general, someone that likes Trump or whatever. They could have done that. But instead, they chose someone who probably is the most loyal. And this is what they've been doing across the board. So we have a government that's being run by a lot of people that aren't really qualified. And they definitely seem to be more in line with corporate interests. You have the richest man in the world, Elon Musk. He got all these other billionaires lining up, snuggling up to the administration. So what does this mean? Trump is going to look to lower corporate taxes, and he's already out there talking about massive deregulation. So in short, Trump is very corporate friendly. A lot of very wealthy people have made a lot of donations. They made donations to him. They're going to expect some return on their investment. So Trump is probably going to do a lot of things that they want, which is going to maximize their profits. We see a lot of things that are leaning towards a lot of rigging of our institutions. So in short, it's a little bit of a wild west right now in our government. And I can only expect or anticipate that, some of these corporations are going to take advantage of, sort of the wild west administration we have going right now and leverage it to, again, maximize their profits. If they maximize their profits, that sounds good for the stock market in terms of investing. However, the other side of the edge that we're on is the consequence of the incompetence, right? You have a lot of people that weren't hired based on merit and experience, but hired based on loyalty, which is good for Trump. They'll be loyal to him. They're not going to push back. But even look at how a corporation runs. I mean, the idea of having CEO who just does whatever, and doesn't answer to anyone, that's just not really the best way to run a business. It's not the best way to run a country. So with the incompetence everywhere and the just sort of dismantling of our institutions, this is going to lead to a lot of uncertainty, a lot of volatility, which is, I guess, good for options. That would be bad for the stock market. So where does that put me? On one hand, I see a lot of positive things for the market in unfortunate ways. On the other hand, I see a lot of threatening things for the market. So my instincts tell me we might see some short-lived gains where we see the stock market sort of have some really good times, some really good, rallies. And then perhaps shortly after, massive crash, or at least some very turbulent times, a period of time where the market is just kind of all over the place, or maybe just trending down for a while. So ironically, I just realized what I'm describing is a crypto future, ironically, for our country. This kind of behavior I'm describing, it sounds like crypto, right? You get involved when there's a boom, prices are going crazy, and you can see massive returns. But it's short-lived, and all of a sudden there's a massive crash, and you can just lose tremendous amounts of money in just minutes. And considering that our president literally just did a meme coin deal, and then his wife did one, that preacher guy at the inauguration did one. So how appropriate would it be for our economy to follow a similar trajectory, to have a meme economy? It's really what I'm describing. So that's what I got. That's my expectations. How do you utilize that to inform your investment decisions? That I can't tell you, because again, a big part of this is the uncertainty, right? Just like with crypto, like when is a good time to buy? I mean, it's just all over the place, extremely volatile. I guess the underlying message that I would give is buckle up, and perhaps now is not the time to be fooling around. I think now is the time to be very strategic. So make sure you're following the fundamental principles. Diversification, diversify your portfolio. Don't be all invested in one sector or one particular type of asset class. I would be overall probably more cautious. If you want to take advantage of some of the volatility, sure, a smaller part of your portfolio, you could do some aggressive moves. But overall, I would make sure you're set up pretty solidly in terms of diversification and a good amount of your portfolio in maybe more low risk type investments. Maybe consider cashing out to some degree, limit your exposure. If you can get high returns on a savings account right now, I mean, just let that money sit there and get that consistency without worrying about whatever chaos might be coming. Maybe that's the way to go. If you've got a big purchase coming up, you're looking to buy a home, these are the things you definitely want to be thinking about right now, because I would hate for you to approach the moment where you want to make this big purchase and then look at your account. If you're going to use your investment account to fund some of it, some of your closing costs, I hate for you to go in there and be like, oh goodness. So those are my thoughts. What do you guys think? What are you doing right now with your investments? What are your expectations for the next 4 years in terms of the stock market? What are you invested in terms of stocks, cryptocurrency? What do you guys got going? Comment below, and I will be reading your comments in the comment section below. This is Carl Speaks Wall Street.